Happy Monday, everyone. It's 8:02 a.m. from Chicago on Monday, the 18th of December, 2017, 9:02 Eastern. Thanks for joining me again as we witness another gap and run. Basically, based on where the market's opening, you might as well watch the trader bite from the 13th, the 11th, the 10th, the 7th, the 5th. It's just the same thing over and over and over. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market this morning is definitely allocating to risk. We're seeing the DAX lead the pack this morning with being up 1.64%. The Euro stocks also strong, 1.24%. Followed by gasoline up 1% and crude oil. We're trading February. Remember, we rolled last Thursday. We rolled to February, trading 57.70 in crude, up 0.63% or 36 cents. The laggards this morning is the brand new on my board here is the brand new CME Bitcoin contract. It's down 2.56%, trading at 19,000, down 500. Even though we really didn't have a prior reference point, it is down 500 from about where it opened. Interesting open yesterday in Bitcoin futures. There was a big spread there between the CME and CFE contract. The CFE contract, as we stand today, is actually at the top of the pack. It's they're mispriced a little bit again because the CME did not have a prior settlement. The CFE contract is up $785, up 4.34%. A quick word on Bitcoin futures. These are highly leveraged on a highly volatile product with a very high margin. I talk about them because it is a product that I am very interested in, as are many people, for several reasons. I'm not interested in it because it's had a massive move and it's a big speculative tool, but I believe it's here to stay for many reasons that I won't get into now. But ignoring something as big as this is like ignoring the S&P minis in 1991. You can just join later, but it's something that I want to get familiar with from the start. So far, just to be honest with you, I have not executed one contract in there in either product, but it's and it has not generated enough for me to see any patterns. It's just quite a bit of noise as of right now. It is an infant product, or a product in its infancy, so it's not something that I can execute on. I don't have any probabilities on anything yet, but I will. I remember seeing this before when I first started trading, and here it is now, another opportunity, in my opinion. Again, the risk is very high. It's not suitable for everyone. Eventually, I think FCMs will provide day trading margin, long and short, once it stabilizes a little bit. It is just too thin, too volatile, and that's just normal for these products when they first start. Anyway, with that being said, the market is allocating the risk. We're gapping up in the S&P. We're trading at 2692 currently, new all-time highs as we open. So we'll see how that turns out today, but it's another gap day, that's leaving us with about let's see, a 9-point gap zone, and about 11 points or 12 points to the gap close. So the statistical probability of that closing are not very high, but they're there. And last time we saw this, the statistical probability was about the same, and it did close. So statistics being what they are, they measure what's happened in the past, and then the outcome is always 50-50 as always. As far as what we're looking for this week, just to shape the week, nothing on the calendar today of significance. There's quite a bit of chatter this morning on the tax plan, and this pop here is a tax plan pop, as well as the I'll go over this in a little bit. The trade on Friday was driven by news, and we'll look at that in a minute. But tomorrow, German IFO, Eurozone construction output, U.S. current account, housing starts, and building permits. So we have a little bit on the calendar tomorrow, but it's all early. Wednesday, German PPI, Eurozone current account, and U.S. existing home sales. Thursday is the heavy day. We've got a bunch of releases out of Europe, and in the U.S. we got core PCE, GDP annualized, and Philly Fed, FA housing, and leading index. Friday's relatively lighter. Friday gets a German GfK, consumer confidence, UK GDP, and in the US we get personal income, PCE core, durable goods, and new home sales. So the distribution of releases is quite constant throughout the week, with Thursday being the heaviest. That's what I'm seeing on the calendar. So what's likely to drive us today? Today, the only thing I see here that's left is NAHB Housing Market Index, which comes out at 10 Eastern, 9 Central for December. The prior is 70. Other than that, nothing else. I'm just basically paying attention to the news. With that being said, let's look at what we expected on Friday. Here's what was outlined for Friday. We were looking for... Let's turn this off a second. Friday, we're looking for a small dip, and then we're looking for an impulse up, and then looking for the market to grind its way up to 2668 to test the value area high, and for it to stall. Given that it was quad witching Friday, this assumes no news, of course, which wasn't the case. So what we had on Friday is very, very different. We ended up making new all-time highs, as you already know. This was the primary hypothesis, which was correct, except there was just no accounting for the news that we got. And then on the secondary scenario, a push up into 68 that fails, and then we start to move down towards 2656. That's what I was looking for there. In case of failure, here's what we got. We opened up. I had warned about a very tight and very uneventful open, and we did get that for 3 bars. This is a 15-minute chart, so for 45 minutes. And then we had the news on Marco Rubio, which reversed the news that came in here. Okay, this was Marco Rubio, who is a senator from Florida, Republican, who basically said that he would refuse to vote for the tax plan in its current state because of a child credit that was not accounted for, that he required, and he would be the tipping vote because our government is basically on a 51 to 49 basis right now until the guy from Alabama gets seated. And then here it comes. The news is he's on board. He's going to vote for the plan. And then there was news again that he may not, and then news again that he will. And the market just took that and ran with it. On Friday, pretty good tests of the mid early on, and then we got another freebie back here. We don't see those often on the close, where the market pulled back right to the mid at 2674.50 before it closed at 82.75, giving us about a 7-point rotation there into the close. This is what we got on Friday, new all-time highs, as I said. And then when we look at what we've done overnight, we've continued. We opened up almost, I think, at the low tick. We opened up and we ticked down just 1 tick, and we drove immediately on the open, pull back to mid again. There it is. And just trending up, a nice channel upwards. The market's balancing. We have basically a P-shaped profile, and we are holding steady with the high of 2693.50. So it's a runner again today. Really, really, it is what it is. You know, it's a market that has a lot of strength. Did you know that the SPX index is up without this gap? Is up 19.5% this year. The S&P 500 up 19.5%. Also, the S&P 500 is up. The index is up 295%. 295% from the low of 2009. It's quite a performance. It's tough to beat that, even with managed, top managed funds. It's really difficult to beat that. And the way you deliver that is you keep the monetary policy very accommodating, and then you promise a 20%, a 15% cut in corporate taxes, and so that's going to have a massive positive impact on earnings, and that's what we're seeing. Okay, this is the market was already strong on earnings, but the promise of a big tax cut inevitably gives us this kind of response. It's expected. Here's what last week looks like: push up, continuation, stall. We open up, and then we have the sell-off, again, political news, and then we have a gap up and a drive, again, political news, and that's what we are. Today, we're trading off of politics. There was nothing from earnings or anything like that would cause us to believe that oh, I lost my thought. But anyway, I see a week high from Friday right there at the top, and then the bottom is not so strong, but again, we finished a week one time framing up. The bottom does not show a taper, does not show an excess low, and the market spent most of its time in the middle here at 2670. So we need to keep that in mind as the market pushes down into the week. This becomes our key target, 2670, 71, somewhere around there. And we've left a week high. So we're gapping up this morning. More of the same. Last week's range was smaller than the prior, and that's what we have. So what are we looking for today? You've seen this before. Same story, same movie, over and over and over. Kind of like Star Wars, which didn't do so well. Open auction that drives that skews a little bit down. I expect us to push to the mid or better, and then I'm looking for it to take an impulse up, go back to where it started, and then squeeze up into 2700. I'm looking for a wall here at 2700 on the first go. Looking for this to be an area that the market bounces off of. It might go through to 2700 and 2 ticks or something like that before it falls off into the close. This is assuming that it holds 50% of the gap or better. That is the primary scenario today. Okay. Otherwise, we have players coming in right away, pushing through. We see a strong push up and open test drive, or an open drive. We are in a gap zone in new price areas, and so I'm expecting it to, this is a pretty decent probability that continues higher. And so I'm looking for it to push up and then for an impulse down to carry us through, likely to base the 50% pullback and then start to work its way down into the prior range. The key target would be, the key natural target would be 2677.50 after 2682.75 to close. But this is quite a bit of range here for a Monday after quad witching. We'll see what happens. Again, we're in a very, very strong we have a very, very strong rally here, so we'll see. But last time we did get a responsive action on the open, and we ended up pushing into the range. Again, in that case, 26.77.50 is likely to be the place. The selling on Friday was quite strong on this bar here at the mid. Okay, look at the volume versus what we would consider to be normal, and by this point, the roll was done. For the most part, the roll was done. The options had expired. Very strong selling. We ended up negative on Friday with price at the high. Okay, and then here we start to walk it up on the weekend again on news. So, no, I'm not ripping on Star Wars. It's just what friends of mine have said about it. I haven't seen it. Anyway, so I'll leave you with that. Good luck today. And I'll catch you tomorrow. I'll be here all week. Next week, I am gone. I'm off and starting a new chapter, hopefully. So we'll see. We'll see what happens here for the week. But expect this tax plan to be central, and expect your news feed to be key this week. I'm just very, very attentive to news these days. I don't want to be sitting through a big move if news is coming out, even if it comes out late to me. I don't want to be fighting it, thinking that it's just a technical move. Good luck, and I'll catch you tomorrow morning. Take care.